This is Gavin Sirkin at Super Return Africa here in Cape Town, and joining me is Paul Boynton, the CEO of Old Mutual Alternative Investments. Paul, what is alternative investments? Let's kick off with that.
Gavin, I'll start off with a broad definition and then get into how we do it, because we're a bit different. But broadly, alternative investments are investments outside the traditional asset classes, which are bonds, equities, and cash. So it would include things like real estate, hedge funds, commodities. But in our world, that's Old Mutual Alternative Investments, we have focused on specific asset classes, which are generally the unlisted. So we're in private equity, we're in infrastructure, we're in what we call impact funds, and we're in a fund-of-fund program, which is investing across private equity funds globally and across Africa.
Okay, so it's basically a huge space of investment.
Yeah.
Relate to us the opportunity that you see in Africa. You know, we know all of the dramatic changes that are going on in the world right now in terms of global trade. Where does Africa fit with all of this?
Okay. We got a great video which we've just put out on our website, which is the investment thesis at a high level for Africa. But, and it's worth going to have a look at that. It kind of covers off of all of the arguments around demography and endowment and whatever, and governance. But where we're seeing opportunity in Africa in particular is in the infrastructure space. You know, the World Bank estimates that over the next decade, in order to catch up on infrastructure, Africa needs to invest $150 billion a year. Now, you know, fiscal capacity across African governments and multilateral aid comes up to no more than half of that amount. So there's $70-odd billion of investment required in Africa every year for the next decade, which, you know, the private sector can step up against. And you know, infrastructure is going to underpin dramatic economic outcomes across Africa over time. If you look at, you know, some of the stats in Africa are horrific. You know, in sub-Saharan Africa, only 25% of roads are paved. And you can imagine the dramatic increase in cost of shipping goods around with, you know, dirt roads and roads that aren't in good condition and whatever. To ship goods through port in Africa is 3 or 4 times the cost of doing so in Europe. So, you know, the infrastructure stock in Africa just can be improved enormously. And once again, World Bank stats, we could add 4% to GDP growth in Africa if we had, you know, infrastructure up to scratch. So it's a huge delta as well.
Okay, so you're talking there about ports and infrastructure. What about tariffs? Because we've seen huge changes, obviously, between the US and the rest of the world, but we've also seen big changes between African countries. Where does that leave the continent and countries that you're focused on?
Yeah, so look, I mean, a profoundly important development in Africa, I think, is the signing of the free trade agreement amongst, at present, I think there are 50 African countries, you know, out of 54 in total, who have signed up for a free trade agreement across Africa. And, you know, Africa's difficulty is that it is a lot of, you know, relatively small economies, and becoming more joined up in a coherent way is so important to the future of Africa and driving the economic potential that sits in Africa. So this free trade agreement is, in my view, a profoundly important inflection point for Africa, because not only is it going to promote the easier movement of goods and create value chains across Africa, but it demonstrates political intent, that African politicians are stepping up against this issue, that, you know what, rowing your own canoe effectively is not good enough. You need to be worried about getting, you know, everyone's canoes moving in a coherent way across Africa. So I think it's going to be a huge change.
Which is interesting, because, I mean, if you think of the media narrative, it's all about US, China, blocks to trade, but what you're identifying is trade opening up in Africa. But you've identified the infrastructure opportunities there. What about the risks in Africa? Where do you see the big risks?
Yeah, look, so the difficulty in Africa, of course, that it is 54 countries, so there are 54 different jurisdictional risks that you can be exposed to. So being across those risks is very important. I think the most important risk, and this is, you know, Mo Ibrahim, whenever he's asked the question around what is the difficulty in Africa, what are the difficulties in Africa, he refuses to discuss any more than one difficulty, which is governance. In his view, there's only one problem in Africa. As you may well know, he's created the Mo Ibrahim Prize, which is, you know, given to a departing president who, in his assessment, has managed well, as it were, and it's a $5 million prize. So it's an incentive for good governance in Africa. And he's established a foundation which assesses governance across 90 different vectors in each country across Africa. They publish real-time data on each of these vectors. So he's really put an enormous amount of the fortune he made out of mobile telephony in Africa back into improving governance in Africa. But what we are seeing, and if you look at his statistics on this, you can see the gradual, steady, continuous improvement across the governance space in Africa. And it's not just at the level of who's the president, it's institutional capacity in a very broad context is gradually being improving. Unfortunately, Africa is often 3 steps forward, 2 steps backwards. So there's some data points that are less happy from a media point of view from time to time in Africa on governance issues. But nevertheless, in the broad sweep of history, there's just been a continuing sort of improvement. And particularly, you've seen in South Africa, recently, this, getting to the edge of the precipice in terms of the governance risks in government within South Africa, and stepping back and recharting a course now, which is very clearly anchored on good governance, rooting out the corruption that was in place, holding those accountable for what has happened inappropriately, and that's a very good data point. So that is the big issue, big risk. Obviously, getting down into other risks, there's regulatory risk. You need to be understanding that. There's the repatriation of or currency risk, both exchange rate risk, but also the repatriation of currency. So all of these things need to be assessed quite carefully in making any investment into a particular country or region in Africa.
Okay, and I heard a very lively discussion that you were in before at Super Return, where you were talking about some of the investments, including schools, that AI invests in. Tell me about how you would go about measuring the impact of that, the ESG element of an investment like a school.
So in setting up our impact team at Old Mutual, we took a view that we were looking to attract capital, investors who are happy to lock capital up for a period of time. We said to them, we will deliver the return that's commensurate with the underlying risk. We're putting debt generally into these transactions, but you will suffer illiquidity in the process, and you won't be necessarily fully compensated for that. But we will be attacking profoundly difficult problems. So, schooling is one. We've set up a schools fund, an affordable schools fund. As I mentioned, unemployment in South Africa is at a horrific level of over 27%. Youth unemployment is significantly higher than that. It's north of 40%. So this issue of, what is the education system producing in South Africa, and what are our young people being equipped to do, is something that really needs, careful attention and improvement. And so our schools fund was an intentional thing to try and, move on this particular variable in terms of the quality of education. So our target is to create private sector schooling for in the affordable space. So we're looking at $200 a month or less in terms of school fees. That's where we're trying to land the price point. And we have created capacity. We've invested the money, but as the schools build out, we will have 40,000 students in the schools that we have developed. And to date, if you look at matric, which is our final year of school, matric pass rates in the school system that we've invested in are a full 20% ahead of the national average. So nationally, we're producing university entrance qualification at tertiary level of something just over 70%. We're a full, sort of 90%, 20% ahead of that in terms of the schools that we've got on the ground. Assessing impact is very important. So a lot of what we're about is, making sure that the educational outcome in the schools that we're invested in is appropriate and in line. So we've got folk who understand the education space well. We assess outcomes not only at the exit level, but also every 3 years. So we are running tests in all the schools that we're invested in, in cohorts every 3 years, to see that the grade 3 outcome is appropriate and on track, and how is it across our cohort of schools? What is if we look at nationally, how's it comparing and whatever. So it's very intentionally driven around a very quality education outcome.
Yeah, Paul, fascinating stuff. Thank you very much. So this is Paul Boynton, CEO for Old Mutual Alternative Investment. I'm Gavin Sirkin for Super Return Africa.